Giles, Rolls-Royce in the news again today. The new CEO, Warren East, is under pressure to steady the listing ship. What's he announced?
Well, there's been a senior management restructuring. Everyone always knew that Rolls-Royce was like almost governmental in its bureaucratic sprawl. And he's got rid of one of the layers, probably more symbolic than actually substantial. It's the layer that divided between aerospace on one hand and land and sea on the other. Underneath that are 5 divisions: aerospace, defence, marine, nuclear, power systems. Those are where the money's made, and they should be reporting straight up to the CEO in future. So a couple of well-regarded managers have to go, but the organisation becomes a little simpler to manage, is the idea.
Well, a cynic would say that just sounds a bit like rearranging the deck chairs on the deck of the Titanic. What does the market think of it?
Well, the market's okay with this, but only because they expect this to be the first of quite a long process. I mean, the way Warren East likes to describe things, remember he came from Arm Holdings, of an IT company, is in terms of the operational software of this company being badly mismanaged and badly written. He's debugging it, and so he needs to cut costs, get information flowing more quickly, get it more pacey and agile. And this is a start. It shows that he's willing to go after quite important structures at Rolls-Royce, but they really need to dig into the organisation and cut what they think is about a couple of $100 million of annual costs to really make it competitive.
Do you think the content of today's statement was aimed largely at investors and outside the company, or do you think it was very much a shot across the bows of the sort of Rolls-Royce bureaucracy, if you like, because some of the language he's used is very uncompromising?
Yeah, I mean, he used quite strong language, and this is because he has a big organisation to shake up. You're right, I mean, the stock market matters, but Rolls-Royce isn't raising equity immediately. It needs to be kept happy. It's the organisation that needs to change. There's, tens of thousands of staff, and they need to know that they can't carry on operating as if the tide is continuously rising. They don't need to worry about inefficiency and cost. So I think that's a really good point you make. He's trying to send a shot across his own bows, because this is an organisation so big you almost have to broadcast at it.
Okay, and his message, as you say, so far has been very much that the problems are internal, that the market opportunity is vast, that the growth is there.
Yeah.
It's just a question of navigating through the sort of what he calls the accounting fog inside the company. Do you think investors believe that, or are there some doubts about the company's whole sort of business model?
Well, they're very keen on that line. I mean, after all, if you've got so much invested in one thing, you want to say this one thing is going to be there once we've got through all this. So they're in wide-bodied engines, are the big area they've been betting on. They expect to own 50% of that market quite soon. And so, yeah, the message is it'll still be there and we're going to be well set up for it. But they've been getting this market wrong in the sense of not being able to anticipate when those crucial servicing revenues are going to flow in. Now, my feeling is, although they've been hit by various cyclical problems, people replacing engines sooner, and so that profit sweet spot not coming along, the oil market disappointing the marine area and so forth, I think that market is still there. We are relatively confident that these orders are still there. It's about whether they can service them competitively and profitably.
Giles, thanks very much.
Thank you, Jonathan.